In the last 2 weeks, two popular YouTubers released a video about the current state of the car market.
But I don't think that the data supports their conclusions for the US market.
Let's find out why.
DeMuro and Jayemoncars don't need any introduction, right? If you watch my videos, there's a good chance that you came across theirs first. Now both gentlemen released a video in which they discussed the current state of the car market. And especially James' video gained a lot of traction. And I received quite a few messages from you asking my opinion on his assessment and if it's transferable to the US market. He speaks about the UK after all.
Now the video titles are quite some statements.
The market is finally, really, actually slowing down, and get out while you can. The crazy Porsche market is officially finished.
Both videos do then also start off in a similar way. They describe the price development over the last years.
Jayemoncars focuses on the Porsche market, but the overall dynamics are somewhat similar to the market in general.
So far so good. I don't think anyone can argue with that part.
We also discussed these dynamics many times on this channel. In short, you just need to know that car prices surged during the pandemic.
It's what comes after this part that's not supported by the data for the US market. You see, both videos are essentially stating that prices are finally coming down.
Jayemoncars says, if you bought a car to make money, now is the time to get off this train. While Doc states, the music has to stop sometime. There's no doubt if you talk to anybody in the car world right now that that time has come.
But I cannot agree to this. The data actually shows that the time of above normal depreciation rates is already behind us.
Prices for some of the cars that they mentioned already flatlined or returned to normal depreciation patterns. In other words, these videos are approximately 1.5 years too late.
Let's have a look at some examples.
Jayemoncars shows for example that there are some turbos and GT3s that lost 8 to 20,000 pounds in the last couple of months. And also Doug mentions that 911s are coming down. Over here we have the price trend for the 992 Turbo and Turbo S's. And this shows that prices peaked already between March and July of 2022. Since July 22, prices have been decreasing, and they decreased fast. In July 23, a Turbo S was worth about 13.3% less or $40,000 and the base model 14.5% or $40,000. In the last 6 months, however, the price decreased. Base models were virtually flat and S models lost only 2.2%. I already shared this with you 7 months ago and reiterated this in the most recent turbo market update. Now for you as an owner, this could mean that it could be one of the worst moments to sell. After all, you already suffered what seems to be the largest drop. But more about this at the end of the video.
You see, the price trend is only one important indicator if you want to know what's going on in the market. Supply is another one.
Looking at the supply for the 992 turbos, we can see that it peaked at the end of 2022 when the depreciation was the highest. Since then, it came down rapidly.
But supply on a standalone basis can be misleading, right? High or low supply means nothing if you don't factor in demand. Unfortunately, we cannot measure demand directly, but we can look at the scarcity level in the market by figuring out what's going on with the inventory levels.
If the inventory turnover is quick, it means that the scarcity is high and that cars are selling quickly. If it's low, cars are spending a lot of time on dealer lots, meaning a low scarcity level and downward pressure on the prices.
So let's have a look at the situation in the 992 turbo market.
Over here you can see the percentage of cars that are listed for sale for longer than 3 months. And this shows that turbos were still selling relatively quickly in the early stages of 2022, but became more and more difficult to sell in the summer. For base models, the share of unsold inventory increased from 20% to 55%, meaning that 55% of the cars that were for sale in December 2022 were also for sale in September 2022. However, since the beginning of 2023, these numbers have been relatively stable, highlighting that the scarcity level is stable again. Also, when we look at the prices of the unsold inventory, we can see that the market is stabilizing. Over here we can see that base models were discounted by an average rate of 6% during September 2022, but that this rate has been increasing ever since. The same applies to the S models. Unsold S's are currently discounted by 3%, and as you can see from the small confidence interval, there's little uncertainty in this number.
Alright, I think the data is clear, right? Prices stopped in 2022, declined massively, and have been relatively stable during the last 6 months. And all of this is supported by the developments in the inventory data. Therefore, I think it's wrong to state that the market only just started to decline. It's already behind us. We can then also see similar developments for other models. Look for example at the prices for the non-touring 992 GT3s. Look similar to the turbo price trend, right? A massive decline followed by stable price patterns during the most recent 6 months. Also, supply is down and discount rates on unsold inventory are at 1% versus minus 6% 1 year ago. The story is the same in the 991 GT3 market. Prices declined during 2022, but have been stable ever since. Perhaps the stabilization is related to the real price level, that is, corrected for inflation. If we make that correction, we can see that prices are at the same level as at the beginning of 2020. So the price level prior to the pandemic price surge. In other words, prices are not as high as we all might be thinking. Looking at the 991 Carrera base and S models, corrected for inflation, we can see that the prices are below pre-pandemic levels, but even including this correction, stabilized in the most recent 6 months. Now Doug also talks about Land Cruisers coming down, but also that I'm not seeing. Similar to the Porsche market, J200 facelift prices decreased during 2022. You can see a drop of approximately $22,000 or 22%. In the last 9 months though, prices have been rock solid. Pre-facelift cars indeed dipped during the last 3 months, but that's only a small percentage of the market and not enough to state that Land Cruisers are coming down. J100 prices, for example, are again stable as ever. These are of course only a few examples out of the thousands and thousands of models that exist, but they are the examples that are mentioned in the other 2 videos. These price trends though are also visible in other segments. That is, the conclusion holds when we aggregate. Over here we have the US year-over-year price change for almost all cars that feature on my channel. On the horizontal axis we have the price change compared to last year in percentages, and on the vertical axis we have the number of cars to which this change applies. Now the average decrease during last year was 7.6%, and most cars lost between 11.6 and 3.4%. Numbers that do not show that the market started to come down. Rather, they're normal depreciation rates. Of course, there are cars that fall outside of these normal rates. On the left hand side you find for example Taycans, while all GT3s and Ferrari 360s tend to fall on the right hand side. It's however not just my data that indicates that prices already started to come down in the beginning of 2022 and that we're currently seeing decreases in the decrease rate. It's also visible in the Haggerty market rating. Now in case you're not familiar with it, the market rating conveys the classic car or collectible car market performance as a number that can sit between 0 and 100. You won't be surprised to find out that the higher the number, the hotter the market. Now contrary to my own data that focuses on prices only, the index is based on a much broader spectrum of metrics. Now looking at the latest update of the index, we can see that it topped in the summer of 2022, when the highest number ever was recorded, highlighting an overheating market. Since then though, the index has been declining, and this matches approximately with the price trends that we saw before. Moreover, similar to the price trends that we saw, the decrease in this index is slowing. Haggerty even states, while the market rating is down 10 whole points from its peak last summer, there are signs that the freefall is slowing. This month's minus 31 point decrease was the smallest monthly decrease in the past 15 months. Let's wrap up and conclude. Based on the data, I cannot agree to the conclusions that are made in Doug's and JayEmm's on cars videos, and I presented you the reasons for it. Car prices have been falling since the beginning of 2022. During 2022 and the beginning of 2023, they indeed fell at above normal rates, but this doesn't apply anymore. Price trends for many models are flattening again. Therefore, I think it's way too late to state that prices are finally falling. It feels a little bit like when news about a rally in the stock market hits the newspaper. Once it's there, you know for sure that you're too late to get in. Now don't be mistaken, I didn't do any price predictions, I just described what the data is showing. I'm always very clear when I switch from descriptive to predictive statements, because the latter ones are pure speculation. And when it comes to speculation, I think it should be done in terms of scenarios with probabilities attached to them.
and doing that, a market crash scenario seems unlikely to me. Inflation is decreasing, markets are pricing in a small interest rate decrease for May next year, and car loan defaults are relatively low with exception of the subprime category. But this is a relatively small market share. A scenario in which cars, in general, depreciate like they used to do before the pandemic seems much more likely to me than a full-fledged market crash. Of course, there will always be exceptions. EVs are, for example, hit extremely hard right now. Now finally, before we end the video, I would like to mention that you should absolutely not see this video as some sort of attack to the other two YouTubers. I'm a subscriber to both of their channels and enjoy their content on a regular basis. I just didn't agree with their conclusions. It's also important to reiterate that Jayemoncars discussed the UK market, while we are talking about the US market over here. I still included it though, because many of you asked about the applicability of that video to the US market. You will see more about the UK market on this channel in the upcoming months. Now if you would like to know more about any of the price trends that you saw in this video, head over to my channel. Over there you'll find detailed market updates. As always, thank you for watching, and I hope to see you next week for a new video.